Welcome to our channel, where we provide you with the latest insights and strategies for building a successful business. In today's video, we'll be discussing the critical topic of entrepreneurial finance. Starting and growing a business requires a solid understanding of financial management, from securing funding to managing cash flow and investing wisely. We'll be covering everything from bootstrapping to venture capital, as well as tips for financial planning and budgeting. Join us as we dive into the world of entrepreneurial finance and provide you with the tools you need to start and grow your business successfully. Starting a new small business. Find out where to begin and how to achieve success. Before starting a business, you should make sure you are well prepared, but you should also be aware that things will probably go wrong. You must adjust to shifting circumstances if you want to manage a successful firm. Making a business strategy requires doing extensive market research on your industry and the characteristics of your target market. Running surveys, holding focus groups, and looking into SEO and public data are all part of this. You need to establish your brand and gain a following of customers that are interested in what your business has to offer in addition to selling your product or service. This is for business owners who want to understand the fundamental procedures for launching a new enterprise. Starting a business can be challenging, but if you divide the procedure into manageable parts, you can make it simpler. Follow this 10-step checklist to turn your business from an idea in your head into a real entity rather than wasting time guessing where to begin and spinning your wheels. How to start a business. 1. Refine your idea. You most certainly already have a concept of what you want to sell online, or at the very least, the market you want to join, if you're thinking about launching a business. Look up existing businesses in the industry you've chosen. Discover how you can improve what you're doing by studying what the current market leaders are doing. You have a sound concept and are prepared to write a business plan if you believe your company can offer something that rival businesses can't, or can offer the same thing, but faster and cheaper. Define your why. Glenn Gutek, CEO of Awake Consulting and Coaching, advised Business News Daily to always start with why. It's important to understand why you're starting your business. It may be prudent to distinguish between the business's service in a personal way and a market why during this procedure. The scope of your business will always be greater than one that is created to address a personal need if your why is centered on filling a need in the market. Consider franchising. Opening a franchise of an established business is an additional choice. You only need a decent location and the money to start your operation because the concept, brand recognition, and business plan are already in place. Brainstorm your business name. Whichever option you select, it's critical to comprehend the justification for your idea. Business by Design owner Stephanie DeSaulniers, who was previously the Convention Center's head of operations and women's business programs, advises entrepreneurs against creating a business plan or coming up with a name for their company before determining the idea's viability. Clarify your target customers. DeSaulniers claimed that people begin their businesses much too frequently without first taking the time to consider their target market and the reasons why they would want to buy from or hire them. You need to be more specific about why you want to work with these clients. Are you passionate about making people's lives easier? Stated DeSaulniers. Or delight in producing art to enliven their surroundings. Finding these solutions clarifies your mission. Thirdly, decide how you will offer this value to your clients and how to convey it so they will be eager to pay for it. You must work out the essential details at the brainstorming stage. It could be time to come up with alternative ideas if the concept doesn't excite you or if there isn't a demand for your product. Identify your why, your target market and your business name to improve your business idea. 2. Write a business plan. When your idea is ready, you must ask yourself a few crucial questions. What is the goal of your company? To whom are you marketing? What are you trying to achieve? How will you pay for the first costs? A strong company plan can provide answers to these queries. By rushing into things without carefully considering these components of the business, inexperienced business owners might make a lot of blunders. You must identify your ideal clientele. Who will purchase your good or service? If you can't uncover any indication that there is a market for your idea, what would be the point? Conduct market research. Making a business strategy requires doing extensive market research on your industry and the characteristics of your target market. Focus groups, polls, and studies on SEO and open data are all part of this process. Market research aids in your understanding of your industry, rivals, and your target market's needs, interests, and behavior. To better understand the opportunities and constraints in your industry, many small company experts advise obtaining demographic data and performing a competition study. The finest small businesses set themselves out from the competition with unique goods or services. This has a big impact on your competitive landscape and enables you to offer potential clients distinct value. Consider an exit strategy. As you put together your business plan, it's also a good idea to think about an exit strategy. Making a rough plan for how you'll eventually leave the company forces you to think ahead. According to Josh Tolley, CEO of both SHYFT Capital and Kavana, new entrepreneurs are too frequently so excited about their business and so certain that everyone will be a customer that they give very little or no time to show the plan on leaving the business. What do they show you initially when you get on an airplane? How to escape from it? What are the things they highlight before the film starts when you go to the movies? Locations of the exits. They line up all the children during your first week of kindergarten and instruct them on fire drills to leave the building. Business executives who don't have 3 or 4 prearranged exits are something I've seen much too often. This has reduced the worth of the company and even strained family ties. A business plan enables you to determine the direction your firm is taking, how it will deal with any challenges that may arise, and what it will take to sustain it. When you're prepared to write something down, use a free template as guidance. 3. Assess your finances. It requires money to start a business, therefore you must decide how you will pay for it. Will you need to borrow money or do you have the resources to finance your startup? Do you have enough savings to go by till you turn a profit if you intend to quit your job to concentrate on your business? Identify the beginning fees that you will incur. Because they run out of money before making a profit, many startups fail. It's never a bad idea to anticipate your startup costs because it may take some time before the company starts to generate stable income. Perform a break-even analysis. A break-even analysis is one method you can use to figure out how much money you need. This crucial component of financial planning aids business owners in estimating the profitability of their enterprise, goods, or service. The calculation is easy. Break-even point equals fixed costs, average price per unit, variable costs. This formula should be used as a tool by every entrepreneur since it indicates the minimal level of performance required for your company to break even. Additionally, it enables you to determine exactly where your profits originate so that you can adjust your production targets. Here are the top 3 justifications for performing a break-even analysis. Calculate profitability. The primary interest of every business owner is typically this. How much income will I need to produce to pay for all of my expenses? Which goods or services are profitable, and which are loss-making? A product or service's price. The majority of people think about the cost of production and pricing when deciding how much to charge for their goods. Find out the fixed rates, variable charges, and overall cost by asking yourself these questions. What are the prices of any tangible goods? How much does labor cost? Review the data. Think about how many products or services you would need to sell to make a profit. How can I lower my overall fixed costs, you ask? How can I lower the unit variable costs? How can my sales increase? Watch your expenses. When starting a business, don't overspend. Avoid splurging on expensive new equipment that won't help you achieve your business objectives by understanding the kinds of purchases that make sense for your company. Keep an eye on your business spending to make sure you're on the right route. According to Gene Paulden, founder and CEO of Rare Form New Media, many businesses tend to overspend. We worked with a firm that only had 2 employees, but they invested a significant sum in office space that could accommodate 20 people. In addition, they rented a high-end professional printer with key cards that could handle a team of 100 people and allowed them to keep track of who was printing what and when. Spend as little as possible at first, and only on what is necessary for the business to develop and prosper. When you're established, you can afford the luxury. We hope you found this video on entrepreneurial finance informative and useful in your journey towards building a successful business. Remember, financial management is a crucial aspect of entrepreneurship, and being proactive in managing your finances can mean the difference between success and failure. Don't hesitate to seek professional guidance from a financial advisor or accountant to help you navigate the complexities of financial management. Thank you for watching, and be sure to subscribe for more valuable insights and strategies for building a successful business.